Good afternoon. Welcome to this timely panel on preparation for future risks. Insurance is always a risk. A roadmap of the risk evolution in South Asia and Southeast Asia. We are facing escalating climate events, cyber threats, geopolitical shifts, and economic volatility, risks that demand bold innovation from our industry. So we'll be discussing on this topic. But two things I would like to just talk to you all before we start the discussions. One is that people must have remembered the Uttarakhand, that Kedarnath strike, when the cloudburst happened in India. In Kedarnath, a huge block of water fell from the sky, and the temple was saved, of course, but then thousands of lives were lost, and all the shops bordering that place were all washed away. Not a single insurance was there. Sardaji Sahab, not a single insurance was there. So when people wanted to, insurance companies went there to inquire whether we can help you all in settling the insurance claims, everyone said we don't have any insurance. And the funniest part is that after all this happened, the shops were rebuilt. Even now nobody takes insurance. So that is a big risk. The other risk is a personal thing of mine. You know, when I was in Bombay, I was putting on a lot of weight. My wife was concerned, so she said that, let's go to Lilavati hospital and I'll get you checked up. So we went. I was put on the treadmill and I passed out very cleanly, although I was putting on a lot of weight, but then there was no problem with my heart. So I told my wife, since you have come, why don't you also take the test? She took the test and the problem with her heart started. So we had to take a lot of care to ensure that our heart is okay. And these are the risks which we face, various type of risks. But apart from that, from these small jokes, the world is undergoing tremendous change, you know, so many risks. You know, we never heard of climate risk. Now climate is very important. Geopolitical risk, just now we saw that one great person sitting in West, he claims everything. I want to take Greenland. Where is green in Greenland? So he said there is ice in Greenland. I would like to take that country. So all these risks are there. And then, have you ever heard of a country going to another country and kidnapping the president of that country? Never heard. These are all the risks which are happening. So coming back to the topic, today we are thrilled to have a powerhouse lineup. We have Mr. Gaurav Anshuman, General Manager and Chief Compliance Officer. Gaurav, congratulations. Chief Compliance Officer of ECGC Limited, bringing regulatory and compliance expertise. Then we have Mr. Pritish Chaube, yes, SBI Life, a very experienced officer whom I had known earlier also. So very glad to have you, Pritish, in this discussion. We have Anindo Pal Chaudhary, whom we call APC, not ABC, APC. He is a technical guy. He manages the wealth of everybody, but he doesn't manage the wealth of us because it's too small for him. He doesn't. Sorry, Anindo, don't take it otherwise. But he's a tech-savvy guy also. And we have Mr. Mahen Gunaratham, CMO at Union Assurance Marketing, mastering marketing strategies and dynamic economics from Sri Lanka. Am I correct? Yes. The company where Mr. Jude Gomes, the previous speaker, was from. So our discussion revolves around three core themes: innovative products for escalating risks, balancing affordability with coverage and technology's role in prediction and mitigation. Let's dive in, panelists. We'll aim for 45 minutes of sharp insights, followed by your questions. So the first question goes to Mr. Gaurav. Gaurav, insurance products are evolving rapidly. What innovative solutions are you seeing emerge in South and Southeast Asia to address risks like climate change, cyber threats, and health crisis? These are all the new things which are coming. So what...
Thank you.
Over to Gaurav.
Thank you. Before I start and to take this question, for the sake of audience, particularly those who may not be well aware about the ECGC, I would like to give a brief of my company, because most of us sitting over here are from non-life, life, credit insurance, and that too export credit insurance is altogether different scope under non-life. ECGC is it's a export credit agency of the country. Our role is critical for the government policies. Whenever any Indian exporter sends his consignment across the ocean, they faces the challenges of uncertain market. Here comes ECGC to support Indian exporters so that we take the risk on ours and allow the exporter to focus mainly on exports. So the topic which is there, I will touch upon what initiatives that our company has taken. So it will be fine, sir? Yeah. So first thing that ECGC has taken to support the government policies and promote Indian export. One is we introduced, before that I will say that there are two verticals of our business. One is export credit insurance that we give to the exporters. And second is export credit insurance which we give to the bankers, to the lenders for Indian exporters. So very recently we have introduced collateral free cover to the banks. Herein, any exporter who intend to take export credit facility from banks up to the limit of working capital limit of 10 crores, we do not insist banks to take any collateral from the exporters. So this helps the exporter to take bank finance at a concessional rate, and by doing so we are helping the Indian exporters to compete with their counterparts and their marketing efforts. Second initiative that we have taken, that recently we have introduced enhanced cover for the banks. Again, this is the indirect way of supporting Indian exporters. So when I say enhanced cover, so our normal cover for the bank is 70%, but by enhanced cover we are pushing it further up to 90%. So any working capital limit sanctioned by a bank, particularly to MSME exporter, up to the limit of 80 crores, coverage has been enhanced to 90%.
Gaurav, but we would like to ask you to throw some light on climate change, cyber crisis threats and health crisis also.
Sir, health crisis may not be, sir, these are the products that we are
supporting.
We are doing. Yeah. So these are not our area, so it may not be that much relevant. So many of the initiatives will have inbuilt features of these things. But as I said, our product is for only two segments, that is, or only one, that is Indian exporters. We have introduced a new cover wherein when we source direct business from our clients, our coverage is even up to 100% without increasing any premium. So this is a direct benefit that we are passing on to the exporter. Third point is, we have also introduced 100% export financing in dollar terms from our IFC office in Gift City. This is in a way encouraging exporter to come and compete with the international players. And one more initiative that we have introduced last year is pre-shipment cover. Primarily our role is to support Indian exports, but there was demand from the industry that the exporters who are doing domestic business also, they wanted a cover. So for them, for the benefit of these Indian exporters who are in domestic market, we have introduced cover for pre-shipment, for domestic cover also, with a condition that their export turnover should not be less than 25% of their entire turnover. We have also introduced pre-shipment cover for the exporters. In case any overseas buyer underwent for insolvency and cancels the order, even the pre-shipment risks are covered. So this is what initiatives we have taken. Many of the things, because our market is niche, our area of operation is different, it may not be sounding well with the questions, but the initiatives that we have taken, that I wanted to bring here, sir. Thank you.
Thank you, Gaurav. Thank you. I would like to go to the island country, Sri Lanka. Mr. Mahen, I have a question for, in fact, I have two questions for you. Mahen, how are insurers tailoring products to meet the needs of diverse economies where risk, exposure and affordability vary widely? This is one question. The other,
Yeah,
you
I'll
answer
pick
this,
that question, but before that, let me now. I think Joydeep also mentioned about talking about next 100 years. Now, what is actually shaping in the industry? It's important to understand where we are going as a global industry. For me, there are three salient changes that's happening. First one is the existing social structures are changing. Now, I don't know how many of you all have heard about social atomization. Anybody who have heard about social atomization? Now, this is gaining traction. Social atomization is all about single owner households. So there are no families. You have a nuclear family, there's only one person going forward. I mean, that trend is picking up. We see declining birth rates. We see people are, choosing to live single, and there are marriages being delayed. So this phenomena is greatly shaping up. And the second thing is, with the oncoming generation, that is Gen Z, we see, again, I don't know, anybody who have heard about mini retirement? Mini retirement, micro retirement, yeah? So that's another, trend that's happening. And I saw an article last, maybe a month ago, Malaysia has already opened up a retirement house for Gen Zs. They would like to take breaks in between careers. So these kind of things are actually shaping how we look at risks. That's on the social front. The second one is technological. We see AI, we see other technological advancements happening, and how people like to receive insurance is changing. The third one is, I don't want to touch the geopolitics, but the third one is, we see increasing level of catastrophe and the severity of those catastrophes. So let me share the same sentiments. We had DITWA, and most of the individuals didn't have insurance. Now, because of these three key changes, how we perceive life insurance, my area is predominantly life insurance. So that entire thing is changing. Now, in this regard, we as a nation, island, how we deliver insurance has to get changed. And also, the affordability is another key parameter that need to look at, because mainly life insurance is delivered via either bank assurance or agency channel, and how it is being sold based on the income that the distributor is getting. So obviously there will be another segment that is not actually being reached. So digital and NAB-based solutions and pre-underwritten policies, etc., is something that we really looking at. Now Jude was talking about Click Life app in the morning. It has about 20% penetration. Now we have opened it up to public as well, so that you don't need to pay the margins for the distributor. So the cost per policy is kept at minimal level. One thing is it is affordable, and also the second one is you don't need to go through traditional channels. You can buy it online. So the accessibility is given, and also the simplicity. Yeah.
One more question I have for you, Mayan. It is from a compliance. Could you share some examples of microinsurance and or parametric insurance models that are gaining traction in your region?
I think we are early in the innings yet. Parametric insurance is not really gain traction yet. I think companies, insurers in Sri Lanka investing in these technologies, but when you look at scale, It will be good for a country like Thailand, where the scale is big for parametric insurance, but in our region it has not really picked yet. But companies are investing. But in terms of micro insurance, our regulator, as she mentioned in the morning, very focused and keen in driving that, because we also in the vision of making our nation closing the protection gap. So we, from Uninational's perspective, we have this particular technology app-based solutions where it can reach to marginalized individuals. But then again, as a country, we have a challenge.
Microinsurance? Do you have microinsurance?
We do have. The challenge is, you can offer microinsurance, it has to be cheap, number one. Number two, the cheaper way of reaching, giving microinsurance is, through digital. Now the challenge is, as a nation, we have not come to that digital maturity level in that social strata. So that is a challenge. But we, organizations, insurance industry is investing behind that.
Okay, thank you, Mayan, for your thoughtful insights. Coming back to Gaurav, since you are the Chief Compliance Officer, from a compliance perspective, how do regulators view these innovations and what frameworks are being developed to support them? Can you throw some light on this, Gaurav?
Sir, we are under IRDAI, so we are in compliance with all the parameters that our regulator has fixed, particularly this vertical-wise profitability that we are maintaining. Some of the regulator is kind enough that they have understood the basic role for which the company was set up. Many of the compliances have been relaxed for us, particularly taking into account our role that we are a facilitator for Indian exporters. So through our diverse coverage to the banks, we are reducing the lending costs. Initiatives, yes, we are complying with the parameters, online platforms that we have introduced, and recently we have even simplified and we have changed to our new ERP system. So these all are taking into consideration all the aspects that is expected from us.
Okay, thank you. Thank you, very good. Thank you very much, Gaurav. Coming back to, I would now throw a question to Pritish. Pritish has got a lot of experience in SBI Life. Pritish, I would like to ask you two questions. One is, affordability remains a challenge. How can insurers strike the right balance between comprehensive coverage and accessible premiums for customers in emerging markets?
Thank you, sir. Before I respond this, it's my privilege to share this esteemed panel along with you. And thanks to ICC for inviting me. Sir, in my view, affordability has been, people normally feel that affordability means reducing the benefit or just balancing the benefit between the price and benefit what we offer to. I think affordability, and people also believe that most of the insurers are managing the affordability on that basis, which is not the case. Affordability can better manage by product design, how offering to try to understand the stress point for your customer and try to bring balance between them. Affordability varies from one individual to other, their risk appetite, their financial positions. And affordability also critical in the term that it should be sustainable for longer term and longer scale growth. So if you look into affordability, also reflect that how you are managing your capital. So if it's all about how you understand the customer stress point, the risk, how you are able to manage the volatility in the risk. We are not just offering, just not insuring a risk. Basically, we are managing the volatility of a customer's financial stress. If you understand appropriately, it is easier part to manage that. If you are able to manage the capital, the cost of capital will be lower. And if you are able to reduce the cost of capital, affordability pricing will go down. If you are able to look about the volume rather than the margin, if you reduce margin, your affordability will go up. Then you look into the customer. Do we really need to offer the all bundle benefit all together? Or we can look into what is the essential at that point of time. So can I not have a product where I understand the customer life cycle, I understand what the risks is required, offer those, provide those protection and price for that. Gradually, when this requirement will keep increasing, we keep adding those benefits. So give a modular approach, price a product, and looking into different requirement do that. Other parts are also we need to the segmentation approach. So if I have to one single comprehensive product in terms of the benefit, or even then it will be difficult. If I have to simple term product itself, which is only one benefit I'm offering, but I have only one product that is available for all the customer, then affordability will come question to the different people. So we have to adopt the different segment, understand the different segment demographic, and accordingly you price those things, and then you are able to offer those affordable product. So in SBI Life, we did have different segment and segmentation in terms of the demographic profile, their lifestyle, their affordability, then also look into what kind of question underwriting they want to answer, whether they want to go for medical, the prices will be cheaper, whether they want to simple. Now what customer look into? Customer look into what benefit you want and how much trust you are creating. The moment you create a trust by making the payment, I think marginal price reduction doesn't matter on that.
Okay. Just a cue from what you mentioned about segmentation. I think affordability will also, I mean, if you think of the ecosystem of the population at large, we can segmentize the population into various groups. The high net worth, the low net worth, the middle class, the working class, the low middle class, the shopkeepers. So segmentation of the ecosystem into A, B, C, D, E, and then create a product for each segment. Will that be okay? Or because the same product cannot be sold to everybody. You know, one product for all cannot be there, isn't it?
Yes, sir.
For instance, I remember a product which was a costly product, brought out by insurance company. I'll not name the insurance company, but it was a costly product because the premium was high, but at the end of the term, what the customer will get was much more. But initial premium was 5 lakhs. Now everybody cannot afford 5 lakhs of premium. I'm talking about the early 2000. So what happened was that the population was segmented and this product was meant only for a particular segment. And they purchased it.
Sir, only one point before
that will be okay, I think.
Sir, only one submission on that point is, if you are offering any particular product for a particular segment only, then it's difficult, because then you are selecting a particular segment and you are providing services to those segments which might be suitable to you in terms of the, if you are using high ticket size, there you are trying to make reach to the high network. I think that will not address the need of the, I will say you're not doing your duty as an insurance provider and not doing a duty for the nation as well. But if you are offering the similar product at a different price point with different benefits to different segment, I think that will be not a challenge.
Nitish, just 1 second. You know, when the concept of keyman insurance came, it was only for the high net worth customers. It was given to companies whose keyman was given a huge high sum insured insurance. Now you cannot give that same product to, say, for instance, a farmer.
Sir,
So there has to be some differentiation.
so what I'm saying,
But one product for all cannot be thought of. But the scheme and insurance was one instance where the product was given to probably the CEO of the company without whom the company will not run or something like that, and promoter. And the sum assured used to be high, 10 crores, 20 crores, 50 crores, 100 crores also we have sold. 100 crores. So that was, these types of policies are there in the market. But what you said correctly is that segmentation will help you all to sell insurance to various categories. That's okay, I think. The second question which Pritish I would like to ask you is that what role do partnerships between insurers, governments and NGOs play in making insurance more inclusive and affordable? This is absolutely the question which relates to your company.
so I think I will say that government, even regulator, the distribution and banks and NGOs are doing really a fantastic job, outstanding contribution in this product. I will take one example for the PMJJY, if I'll say. So I came from the very rural background, and where I see someone in the rural old family, someone die, then people don't have the money to do the cremation, and they do borrow money, and at the end of the day, by paying the interest, they lose those small land, piece of land as well. What PMJY did, that at least you give 2 lakhs rupees, and that amount is being used to do that, so is helping. So this is the make affordable to the, in our company SBI, we are covering more than 5 crores lives under the PMJJY. Is more than what LIC also do as on date. It's a very simple product, and if you see the claim settlement is also much better than that. And sometime as a insurance industry, I am also part of this industry. How much cover we are not able to provide the coverage to number of people, I think this is scheme itself able to offer us to do that. And we are a part of some of the working with the government as well, try to enhance this cover if you are able to offer this enhance. Similarly, if the micro insurance, if you look to the part, the small provider is providing 5,000 rupees loan, another, they also coming with the insurer and the group platform, because the cost of distribution is much lesser, cost of administration is also lesser. If you properly manage those risks and able to offer this benefit, I think that area also helping us to make the penetration. And what Mr. Sharma mentioned in his speech, IIT is working on this Bima Vistar kind of product, where not only the life cover, but also try to bring the health, accidental and property as well. That will come, I think that will further enhance the penetration for the company.
Thank you, Pritish. Coming back to Mahin again, Mahin, how do you see distribution channels evolving to reach underserved populations while keeping costs manageable? This is your area, Mahin.
Yeah, I think, world over, at least in Asia, we have the predominant channels that is the agency based. The second one is bank assurance. That is kind of maturity level at the moment. Maybe in the banker you have still more room to penetrate. But we need to, if you really need to penetrate to the underserved people, these key channels is not going to do the job, because these channels are predominantly driven by fee income. If it is a bank, they need the fee income, meaning you will have to sell higher value policies. So obviously they will not be serving underserved customers. The second one is the agency channel. Now agency channel, traditional agent channel, individuals will work for their income. So obviously they will push high case values, and they will go behind better customer base. So obviously this is don't neglect. The only way is it either one is the regulator should mandate out of your entire, custom portfolio, this percentage has to be from, that, strata. One way. It's a, difficult way. The second one is you need to find different avenues. The best avenue that I can think of is, one is embedding insurance into small ticket sizes, maybe via telcos, maybe via supermarkets, maybe via, bus tickets, so that, you don't feel the friction of buying, but they are protected. The second one is through digital channels like app-based or online-based, where the margin is reduced. So the margin is reduced, or you don't need to pay the distributor margin, so that the cost is at a minimum level and the accessibility is, great, and so that can reach direct to customer without being dependent on another channel which is going behind their volumes.
Yeah.
I have a take here, Mahen. I'll share my own journey. When we started, we left our banking job and started an entrepreneurship. In the initial days of wealth management, we never used to sell insurance. Okay? We were really very wary about the market feedback and the perception, because every time you call somebody insurance, people will keep the phone down, because the bankers and the agents have, pardon my language, polluted the environment. Because insurance today is no longer a push product. Okay, it is a need-based products, and banks, as you rightly said, typically run after high commission, high income kind of products. If I may put it in a crude word, bankers today believe in one night stand, whereas people like us who are in the entrepreneurship, we believe in marriage. Because if you do well to the client, he would stick to you for lifelong and would give you 20 references. So that was the only small take I had. I thought I'll.
Thank you, Anindo, and thank you, Mahen. Now coming back to technology, which is APC's area, Anindo Pal Chaudhury's area. Anindo, technology is transforming risk management. How are AI, big data and predictive analytics being used to anticipate future risks? It's a very important question. I think you will be able to handle it nicely.
I shall try my best, sir. First and foremost, I thank ICC for having me here. It is indeed a matter of huge privilege, and also I run the risk of having a feeling like Yashasvi Jaiswal batting with Sunil Gavaskar, sitting beside Mr. Roy Chaudhary and trying to make points on insurance is giving me that kind of goosebumps. So I'll try my best to address it. So if I had to summarize this in one line, we are moving from a reactive insurance to a predictive insurance. Southeast Asian countries account for 45% of the natural disasters, all kind of typhoon and flood and everything. However, if we see the insurance penetration for that is even less than 10%. So that's the kind of opportunity arises here. Risk prediction has shifted from hindsight to foresight. Today, underwriting relied on 5 to 10 years historical loss data, but AI can actually predict climate and satellite data, mobility and transaction data, health variables, behavioral and lifestyle indicators. Hard data, if I may share, McKinsey estimates AI-driven underwriting can improve loss by 3 to 5%. Swiss Re research shows that parametric or predictive climate models can reduce claim settlement time by up to 90%. In Asia Pacific, insurance are using advanced analytics to report 20 to 30% better risk management. If I give some regional examples, since we are in this part of the world, parametric flood, cyclone covers in India and Bangladesh, you know, they cover a large population of the farmers. You know, if AI can predict this kind of incidents. In Philippines, the AI is using rainfall and wind speed triggers. For health, AI can actually predict the diabetic or the health disease much before the incidents happen. So I would say that, you know, a future of insurer doesn't just lie in pay claims, but to prevent them by predictive analysis, by using AI, big data, and using it to a much better insurance environment. I hope I've been able to answer.
Yeah, more or less you have been able to answer this. Coming closely on this, there is another question I would like to ask you on Indo. While technology enhances efficiency definitely. In the last 30 years, we have seen how technology has come forward in the insurance sector. If I look at the insurance sector 30 years ago, there were hardly 2-3 products. 30 years back, only LIC was there in the market. And we used to know of 2-3 products only, the money back plan, the endowment plan, and the whole life plan. 30 years down the road, technology has taken a big leap forward, and today we have InsurTech, we have technology-driven products which are aiding insurance companies to market the products and making the products affordable to the nook and corner of the countries. So on this, I would like to ask you one question. While technology enhances efficiency, how do we ensure human oversight remains central to decision-making in underwriting claims? So,
I would like to start on a lighter note example. If we are totally technology driven, then what will happen? So a friend of mine in US had shared a very funny incident. He and his wife had some argument and Alexa was on. And during the argument, the word divorce was mentioned. Next day, both their emails got flooded with divorce lawyers' email IDs and information or coordinates. That's sole technology for you. And that is where the human intervention requires. Technology can be an enabler, but at the end of the day, if you do not have empathy, the human brain, technology alone cannot be the solution. So AI for example, is very powerful. AI can give you a lot of algorithm, lot of data, but at the end of the day, the human has to really get into how much to take it and how much to use it for the benefit of the industry or the client, or for that matter, for any such situations. So AI can do risk scoring, fraud detection, pattern recognition. Now where human comes is final underwriting decisions, exception handling, and claims empathy and dispute resolution. So data-backed insurances using human AI hybrid model is the ideal model, which can make 30 to 40% faster claim processing, higher customer trust scores than a fully automated ones. Regulators across Asia increasingly made explainable AI, not the black box decision. Practical example, during COVID, AI failed to price pandemic risk accurately. Human intervention recalibrated exclusions, moratorium, and grace periods. So in one line, I should say that AI should recommend, not decide. Accountability should always be with human.
Correct. I think most of the insurance companies have taken to technology, particularly for non-medical cases. I think 70 or 80% of the cases are done through the machines. Am I correct, sir? Most of the cases are done. SBI, I know it is being done. Many other cases, insurance companies, they are doing it. But as you rightly said, the human intervention ultimately requires attention also. The third question I would like to say is cyber security. 20 years back, we never heard about cyber security. Today, even the regulator also has told all the insurance companies what are your cyber security precautions you have taken. These are being audited and inspected also by the regulators. So in cyber security itself is a growing risk. How are insurers preparing to protect both their own systems and their customers' data?
So that's an excellent question, sir. So today cyber security is not an IT issue, it's a balance sheet item. Okay, cyber incidents in Asia Pacific region growing by 23%, but less than 15% of the SMEs carry cyber insurance. I think they still do not understand the nuances or the importance of it. If I can share some insights, the scale of the problem. Global cybercrime losses crossed, I repeat, USD 8 trillion. USD 8 trillion as on 2024. Asia Pacific is the top 3 most targeted region due to the rapid digitization. What insurance are doing internally is zero trust architecture, continuous penetration testing, AI-driven threat detection, mandatory cyber hygiene for vendors and partners. Cyber insurance evolution shift from generic covers to ransomware specific policies, business interruption from cyber events, incident response plus forensic support bundled together. Customer protection angle means insurers now act as a risk managers, not just as risk carriers. Cyber awareness training, pre-breach vulnerability assessment, SME cyber toolkits. In one word, in cyber risk, prevention is cheaper than premiums, but recovery is more expensive than claims.
Is it? My God. So, coming back to the last question I would like to ask you, Anando. Looking ahead, what role do insurtech startups play in complementing traditional insurers in building resilience against future risks?
So, insurtechs are not here to disrupt insurers.
Yeah.
They are here to de-risk them. I think the clear perception needs to change. There are 3-part framework. One is speed and experimentation. Second is distribution and inclusion. And third is data intelligence layer. So when we say speed and experimentation, traditional insurers, stability, scale, trust, insurtechs, agility, rapid pilot, and niche solutions. Example, 6 to 9 months product cycles versus 6 to 9 weeks minimum viable product. Under distribution and inclusion, digital first models where customer acquisition cost comes down by 40 to 60%, policy issuance time from days to minutes. This is what insurtechs bring on the table. Micro insurance, bite-size insurance, and embedded insurance flourish here. And under data intelligence layer, insurtechs convert raw data into actionable insights, real-time upgrade, and behavior-linked pricing. If I talk about the Southeast Asia relevance, 60 to 70% population here is underinsured, whereas the usage of smartphones are more than 75%. Just imagine the priority is shifted or tilted where. So insurtechs bridge this gap and make people aware and do the resolution. So the future belongs to the ecosystem, not silos. Insurers bring trust and capital. Insurtechs bring speed and intelligence. Together, they build resilience.
Thank you. Thank you, Anindo. Thank you all the panelists for fantastic insights. Let's now hear from you insurers, insurtechs, regulators and brokers. We are short of time. We'll take 3-4 questions, hurried questions. Over to you for any questions to the audience. Yes? Give him the mic. Please mention your name, which company you come from, and to whom you are throwing the question.
So, my name is Joginder Singh. I am President and Group CFO for Hero Insurance Broking. Hero Enterprise, actually. Insurance broking is one part of that company. My question is very simple. You know, if Delhi government approaches the insurance company for taking pollution insurance, what would your response be?
Well, the premium will be very high, no doubt about it, very high. But we have not, nobody has thought about it, isn't it? You are from Delhi. And during this period, if you go to Delhi, you know, it's very difficult to stay without a mask. And people run away from Delhi during these periods. I've known friends who stay in Delhi. Yeah, a lot of things to ponder about. Insure companies, I think you should think about a new product, how to insure pollution in cities like Delhi. Not only Delhi, all the metro cities itself. Good question.
But if I may add, I mean, we are, I think it's a too primitive stage as we speak today. But I'm sure with the predictive analysis, there can be some sort of a cover or something can be thought about. I mean, it is not, I don't think that it's an absolute no. Yeah, we have a long road to go ahead. But I mean, it's a pattern. We know that in winter it increases. So AI-based predictive analysis can be used and thought of something. I mean, no, actually, we have Mr. Sharma here. The regulator is himself sitting here. So
can be thought of, but you see, in Delhi, it's very unpredictable because the more they burn the crops in, I think, Haryana, the more polluted Delhi becomes. And nobody can stop that burning. Anyway.
Even
yes,
the pollution volatility in Delhi is much higher. Agree. So
yeah.
Any insurer, even they want to offer this cover, I think pricing will be challenging because the volatility is significantly higher. So unless and until your volatility will come level are able to manage, reduce the volatility, it will be difficult to offer affordable products as well.
You see, Bombay and Kolkata, they have two very advantages. And advantage one in Mumbai is that Mumbai also got huge traffic, humongous. But the benefit in Mumbai is that you have the sea. So the wind blows this way, that way, and the pollution goes over. In Kolkata also we have the river Hooghly, so the wind blows and takes the pollution out. But Delhi, this thing, pollution is something remarkable. There is no river, although the Jamuna is there, but still it's hardly a river, you can say.
Can I share an
Yes,
insight?
Jaideep.
So, it is funny, I mean, you say this is bordering between insurance and derivative, because by pollution, we now are talking about AQI. We are not talking pollution. AQI is just one element of pollution. And the AQI, if it is happening every year regularly, which becomes predictable, then it is non-insurable. Because insurance by nature works against something which cannot be predicted but over a mass. It can be insured if city comes into the fair. London AQI is 2 round the year because they prevent cars from outside entering, and 30 miles per hour is the maximum speed limit. Yes, but they have made it 2. It's 2. And if you check it out, throughout there it will be 2. No, but that, no, I'm saying they have managed it. Now, if you tell Pritesh as an actuary that I'll bring London, I'll bring Delhi, I'll bring Cairns, and I'll bring an island Okinawa, he'll say, yeah, I'll make a pricing because there'll be cycles. So reinsurance-wise or across country, it can be done, but not on AQI. If pollution-related illnesses can be insured, because they are not that, there is no 1:1 correlation. Doesn't mean people are all dying. So therefore, pollution-related death or pollution-related illnesses, that is something where there's uncertainty. Insurance will never work when you exactly know somebody's too, they'll say, I'll not pay a premium. I'm 784, no point in paying a huge premium. So the hyper-personalization does not work when it is parametric.
It's a good question, I think. We have run out of time, sorry. What a roadmap, we have taken it offline. What a roadmap we have charted today from parametric innovations and affordable models to tech-human synergies. Takeaway in South Asia and Southeast Asia, preparing for future risks means agility, collaboration and bold bets. Thank you panelists and audience, join us for networking, safe travels. But one thing I will, before I end, one thing I'll tell you, whenever we have this sort of insurance conclaves, a particular product in a country, which is very good product, gets copied into another country. There is an example, I'll not mention the countries, but there was a product in one country which was very, very good product. It was exactly copied in another country, it sold like anything. So these are the benefits and takeaways which we can take away from these conclaves. Thank you everybody, thank you very much.